Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time. This week's topic, guys, is the 5 things that I wish I knew before I started trading, right? There's a lot of things out there that you think about trading or that you assume about trading, or maybe even you hear from people that you might respect about trading, but it's not always the same as what you hear and what you think and what you expect. And that was the experience that I had when I first started. So I thought it would be a good idea to do a lecture on the 5 things that I wish I had known so that you guys won't make those same mistakes, okay? In terms of money management, in terms of listening to the Google, Facebook, Instagram media hype, in terms of order entry, fills, in terms of simulator trading, the holy grail, getting rich quick, all of those things I wish I had known, because nobody told me those things before I started. And because nobody told me those things before I started, I think I entered this business with unrealistic expectations that weren't in alignment with reality or in alignment with my experience. So I'm going to talk about that in today's video, guys. As you can see, the surroundings are a little bit different. I've been traveling a lot recently with coronavirus. Obviously, everybody in the world's pretty been stuck in their own little bubble for a few months. Well, because of that, there's some opportunities that I've missed upon, and now I'm traveling. I'm coming back from Florida, took a look at a piece of property, so I'm going to do the lecture actually here on the plane, just because I need to kill 2 birds with 1 stone and get some things done with the busy schedule. But I think today's lecture, guys, you'll get a lot out of it. Why? Because part of the reason, in my opinion, that people fail in this business is because when they come into the business, they just don't understand what's required. They don't understand what's expected. They don't understand or appreciate how long that's going to take to get to the level they want to be, because they're so used to seeing those Google advertisements where I turned $500 into $1 million in 100 days, and you can too. All you need is a $100 account. That's a bunch of crap. That's not the way it is. Trading is a real business, just like any other business, and it requires time, hard work, a lot of effort, guys, and also realistic expectations. It's such an emotional business. You have to be on top of your game all the time. You go to a normal job, you get paid. You go to a sales job, maybe you make money, maybe you don't. You come into trading, guess what? Maybe you make money, maybe you don't. But there's a third option. Maybe you lose money, okay? Nobody talks about that kind of stuff. So again, today's lecture is going to touch upon the 5 things that I wish I had known before I started trading, or when I started trading, so that you guys will have a much more realistic approach to this business, all right? As always, guys, if you like the video, please click that like button, smash that subscribe button, and you can get a $1 14-day trial to the Live Traders chat room. The link is in the description. I'm Jared Wesley. Let's get to it. All right, guys, this week's lecture is on 5 things I wish I knew before I started trading. Right? There's a lot of hoopla out there and hype and articles and advertising that makes you think a certain thing about this business, but in reality, the business is much different than most of what you read and see out there. So I thought it would be important for me to talk about the things that I wish I knew, because there's probably a lot of things that you wish you knew, and for new people watching this, there's things that you're thinking about the business that are probably not accurate, okay? But before we do that, we have to do this week's When Will the Insanity Stop? This week's is a little bit different, and the reason this week's is a little bit different, guys, is simply because you guys are used to me kind of hammering on people for losing money, right? That's kind of the common theme. If you lose money because of being foolish, then I hammer you. But this week's is the opposite. I want to show somebody who actually made money but did it the wrong way. All right, so check this one out this week, okay? So this is somebody who turned $1,400 into $18,000 in 3 months. Now, some of you are going, oh my gosh, that's amazing, that's incredible, wow, I can't believe it. But the question is, if you're a new trader, how in the world is it possible to turn 1,400 into 18,000? It's not like you bought a $1 stock and wrote it up $20. This is a person who's consistently trading. The only way that that's possible, is for somebody to be risking way too much money. So this person basically saying part of my plan is to stop trading if I lose $300 in a day, or if I make $300 in a day. Now on the surface that sounds good, and normally that would be okay, but not for somebody who's got a $1,400 account. Guys, that's almost 25% of your account you're willing to lose in one day. So if you had 4 bad days, you don't have an account left anymore. So please, I don't want to spend too much time on this slide, but please, 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 use good money management, all right? Use good money management, guys. It's extremely important if you want to be a successful trader. And yes, I'm happy this person made 16 grand. You did it the wrong way, and if you continue this trend, you're gonna give it all back and then some, okay? So I know some of you think, well, why are you dogging on this person? Because this is how most people are losing money, big money, and this person just happened to be lucky and fortunate not to do that, okay? The other thing I want to comment, I started this last week because somebody out there, Jim, was saying, oh, you don't call these things in real time, Jared. 3-bar plays are great after the fact. How nice is that for you to tell us? Well, the truth is, I don't put them out there after the fact. I put them out there beforehand. So here's one from a couple days ago on the SPY this time, SPY, the S&P 500, where there's a wide range igniting bar on the 5-minute, followed by a narrow range resting bar on the 5-minute, and it didn't have a lot of room. It only had about 50 or 60 cents. But I put it out there on social media, on StockTwits, Scoutmasters, the call sign there, 5-minute 3-bar play on the SPY around $310. Not a lot of room, but could scalp it. 20 to 30 cent stop loss. Well, it ended up going about 70 cents. That was put out there about 3 or 4 minutes before that trade triggered. So I don't want to hear it anymore. If you want to see these trades called in real time, come into the chat room. Otherwise, stop complaining about it. All right? So let's move into today's topics, guys. So I'm just going to put them out there to begin with, all right? Number one is always trade management. I wish I had known about, money management. I wish I had known about money management from day one. And I bet most of you wish you also knew about money management from day one. Why? Because money management is the only thing that keeps you in the game. Without it, you're going to be an ex-trader pretty soon. Simulators are not real. I know you know they're not real, but guess what? The way you're treating them, you think it's real, but it's not real. The feels are different. The emotions are different. We're going to talk about that. It's going to take you a lot longer than you think to succeed in this business. Yup, you heard it here first. If you want to go over the Fourier and some of those other places where they're telling you can be rich in 7 days, 22 days from $100, they're wrong. Try it. Tell me how it goes for you, okay? Now, don't get me wrong. Maybe 1/100th of 1% of you out there watching will get lucky, and maybe 1 out of 10,000 will do it, but most of you won't. And it happens. Shit happens. Getting filled isn't always easy. We get slippage. We get skippage. You have internet problems, frozen trading platform, market servers go down, high-frequency trading machines shake us out, insane random news, tweets, right? And there is no holy grail. So have a plan. There is no holy grail. Have a plan, okay? So I don't want to spend too much time on money management, even though it's the one thing that matters most. Because if you can manage your trading account and you can manage your money, you will never be in trouble in this business. Never. You will never be in trouble in trading if you can manage money. Why? Because if you're risking $5 or $10 and you have a $10,000, $20,000, $30,000 account, that's a heck of a lot of losing trades before you have to give up, right? So if you can manage your money properly, you'll always be okay. What that basically means is never risk more than $10 to $20 per trade as a new trader until, and here's the key, until you've shown 3 months of consecutive profitability of at least 5 to 10 R a month. 5 to 10 R means 5 times your risk. So if you're risking $10 and you made $50 that month, that means you made 5 to 1, right? So making 5 to 1 is a good thing, especially for a new trader, okay? So you want to definitely consider giving yourself at least 3 months to do that. Now, why would you want to do that? Because it shows consistency, right? It shows consistency. So let your results be your guide. Why? Because if you don't, this is what's going to happen. And what's that? minus 15%, minus 17%, minus 94% in 1 month. Guys, this person had a $26,000 or $27,000 account, and in 1 month they lost $25,000. 25 grand in 1 month of a $27,000 account. This person lost 18% in 1 week. Think about what I'm saying, guys, okay? It doesn't end there. Here's more people. This person lost 57% in 1 week. This person lost 98%. Guys, take a look at that. $59,000 loss in 1 week. Wow, are you kidding me? A $60,000 account, you paid back 59 of it. $59,000. So if you don't think money management is important, take a look at these folks. I bet you they wish they had better money management, right? What is risk level? This is how money management works, guys. I get a lot of questions about this. What is R unit? What is risk level? R equals risk, and risk means how much you're willing to lose on the trade if it doesn't work. If it doesn't work, okay? So it says it right there. All right, now, this is not something to take lightly because it will ultimately have what? A drastic impact on your trading success or failure. Most traders risk too much money too soon, plain and simple. They do. They come in, they want to get rich quick because they saw some advertisement how they're going to turn $200 into $1 million in 46 days, and they just risk a lot of money, okay? So you're going to take an entry price, in this case 50 bucks, a stop loss, say 49.50. How do you determine those? The chart. The chart tells you how you determine that, okay? Say you wanted to risk 500 bucks. You're an experienced trader. Only experienced traders can risk 500 bucks, okay? So you would take the entry price minus the stop loss, which is 50 cents. All right, and then you would take your risk level and divide it by 50 cents. So in your calculator, you would go 500 divided by 0.50. 500 divided by 0.50 equals 1,000 shares. So if this trade does not work, you lose 500 bucks. If the trade does work, well, you'll make 2,000 bucks or 1,000 bucks, depends on what your target is. My targets are usually 2 to 1. So if I'm risking $100, I'll make 200. If I'm risking $1,000, I'll make 2,000. If I'm risking $5,000 on a trade, I'll make 10,000. That's, for me, static risk. Now, risk level in terms of how much your winners make, that's up to you, right? If you want to shoot for 5 to 1 targets, 10 to 1 targets, that's up to you. I shoot for 2 to 1 because I think it's a very good balance, a very good happy medium out there for people, okay? So consider that, all right? Again, for new traders, please don't risk a lot of money, all right? Here's just a slide, guys, that kind of shows you how it works, right? I put this in a lecture, I don't know, a few weeks back. And you can see a wide range igniting bar, red bar, bearish bar, takes out the prior pivot support area, okay? And this wide range bar is followed by what? 2 narrow range bars. So really what we have is a 4-bar play right here, okay? And the 4-bar play is, in my opinion, one of the better plays out there because of its simplicity. But it's not what this slide's about. In this case, you have 106.75 was the entry with a stop loss at 107.25. So that's a 50-cent stop loss. So if you want to risk $10, you're going to need 20 shares. $10 divided by 50 cents is 20 shares, okay? That will equal a $10 risk. If it doesn't work, you'll lose 10 bucks. If you wanted to risk $100 bucks, just add a 0. If you wanted to risk $1,000 bucks, add another 0. But for the new traders, you guys really shouldn't be risking more than 10 bucks. But this slide clearly shows what risk level is and how to control it, all right? Now, this is a big, guys, I apologize for the bumpiness here. We're coming down a little bit, and honestly, probably going to be landing here in about 15 minutes, so I might not even be able to finish this in the air. I'll have to kind of finish the rest of it at home, I suppose. But hard stops, soft stops, mental stops, bane of your existence. Do not use mental stops. Don't use soft stops. I don't want to hear about it. But Jared, your broker can see your order. Jared, high frequency trading systems, they fish through your order. Look, man, high frequency trading systems are very good. They know where support and resistance areas are. If they're going to take the area out, they're going to take it out. And guess what? You're going to get stopped anyway. But what happens if it doesn't come back? Answer yourself that question. Ask yourself that question. What happens if you take a trade and you have a mental stop and it goes past your mental stop and you think, okay, when it comes back up, I'll get out. And what if it doesn't come back? What are you going to do then if it doesn't come back? Then what? You're going to lose 2R, 3R, 5R, 10R? What are you going to do? The question is, the answer is, you don't know. You really don't know. Then you become what? An investor. And you're no longer trading, you're investing. And you're no longer trading with statistical probability. Now you are hoping. And you never want to be in hope mode. Hope mode means something really bad happened, and now you're just trying to dig yourself out of a hole. And some people, and I think we can go back and prove this, some people never dig out. Why? Because the hole's just too darn big. In this case, 98% loss in 1 week. All it takes is one stinking trade to do that. One trade to blow up your entire account. So don't be a smart ass, don't be a smarty pants, don't think you know better. Take your stop. Put a hard stop in the system. If you're not going to do it, don't trade. All right, just don't even trade. You're wasting your time, okay? So, management conclusions, guys. Look, be realistic. Take small amounts of risk. You wouldn't go play LeBron James in a game of basketball and expect to take money from him, would you? You wouldn't go expect to play Tiger Woods in golf and take money from him, would you? Especially if you've never played. Be realistic, okay? Risk small amounts of money in the beginning. Preserve your capital. You earn the right to raise that risk, right? So when you're good enough, you can raise your risk. After 2 or 3 months of profitability, you can slowly begin to raise your risk. Have rules for raising your risk. Have rules for lowering your risk, okay? And you control that risk by what? Putting a hard stop in the system. Yes, not a mental stop, not a soft stop, a hard stop in the system, okay? Define your maximum loss for the day, for the week, for the month, etc., okay? And make sure it's very, very clear. Have a written trading plan. Because, guys, at the end of the day, to succeed, you first have to last. If you can't last, you're not going to succeed. So to succeed, you first have to last, okay? Now, simulator trading. Yeah, man, I'm up 50,000 in my paper account. Me, I've never met a losing paper trader, you know? Cool story, bro. Cool story. How many of you guys made money in paper out there, and as soon as you went to real money, you lost money? Like 98% of you are raising your hand right now. Seriously, ask yourself, how many of you started on paper, did okay, made a little, made a lot, whatever, and as soon as you went to real money, you got hammered. And like, I don't know what happened, Jared. I don't know what happened. I do. You weren't treating it like real money because it's not real money. So it's kind of hard to treat it like real money. So what does that all mean? What does that come down to? It means don't paper trade too long, okay? There's nothing wrong with simulator trading. It can be very, very useful. In fact, you have to do it, right? You have to simulator trade. Like when you first learn to drive a car, they don't put you out on the highway, do they? No. You do start in a parking lot. Then you go on the back roads with nobody on them. And then you go on a little bit of a busier road. And then you ultimately, eventually, go on the highway, right? But you don't do that from the start. You do that later on, okay? You don't do it from the start. So the point I'm making is learn your platform. Learn the different order types. What is a limit order? What is a stop market order? What is a stop limit order? Okay? What are those types of orders so that when you go to the real money, you're not going to unnecessarily lose money by not understanding the types of orders you need to use, okay? Learn your platform with charts, with trend lines, how to put indicators on them using volume. Learn how to set a bracket order, order cancels orders, order sends order, OSO, OCOs. Learn all the basics of your platform first, okay? But make sure while you're doing all of this, you're trying to be as realistic as possible. And what that simply means is you're trading $10 risk like you should, like you're going to be on real money. You're trading highly liquid stocks. I see a lot of people on paper trading, and they're trading super thin stocks. And the reasoning behind it is, oh, well, it's paper, Jared. I'm trading small share size anyway. No, that's a bad habit. You don't want to set a bad precedent, a bad habit for yourself. Okay, so don't do that, all right? Take the same number of trades. Trade the same trading plan. Do all of the things you would actually do with real money. Stick to your trading plan. Back test new ideas. Put a spreadsheet together, a trade tracking spreadsheet. Do everything you would do if you were trading real money. Why? Because you're going to be trading real money. A simulator is supposed to closely replicate real trading. And for many of you, it's not. You're out there with a $100,000 account in the simulator trading $2,000 risk, when in reality you have a $5,000 real account and you'll be trading $10 risk. Well, that's not the same thing, right? That's not the same thing, okay? So, there are no emotions in simulator. The fills are way better in simulator. You don't get much slippage in simulator. In fact, stocks that are hard to borrow aren't hard to borrow in simulator. I don't know if you guys know how most simulators work, but let's say you have 5,000 shares of a stock, and that stock actually, in real life, real time, prints 100 shares at that price. So say the price is $51, and the stock prints 100 shares at $51. Guess what? If you're in simulator and you went to buy that stock at $51, and you had 5,000 shares, it would fill you for 5,000 shares. Because the simulator doesn't know the difference. The simulator basically says, all right, shares were printed at that price. That order is real. So the simulator says, okay, I don't know how many shares were printed, but I know shares were printed there. So I'm going to fill you for everything. Notice you almost never get partial fills, if ever, in simulator. So in reality, you had 5,000 shares, but the simulator, but the actual stock only traded 100 shares. Well, there's no way you could have been filled for 5,000 shares at that price because it only printed 100. That's not real trading. But you don't know that until you switch to real money. So I'm here to tell you that and expect for those things to happen. That's why you can't or shouldn't spend more than 4 to 6 weeks on a simulator, right? You really shouldn't spend more than 4 to 6 weeks in a simulator, okay? Guys, here's a great example of it. Somebody sent me this on StockTwits. I'm new to trading, low risk size, that's good, so I haven't really sweat much slippage. But I used the wrong order type, and I got filled over $2 late. Over $2 late. So this goes back to understanding your platform. Understanding what type of order you're supposed to use. Stop markets, stop limits. This person's entering trades using limit orders, using stop market orders. You're at the mercy of the market. Of course you're going to take nasty slippage on spready whippy stocks. With a stop limit order, you get to choose how much you're willing to pay for that trade. Right? So you give the trade a range to get filled in. And if you get filled in that range, great. And if you don't, you're telling the computer, please skip me. I don't want to pay more than this. Well, that's a good way to trade. If you start with a stop market order, guess what? You could get filled anywhere. You can get filled anywhere, okay? Now, this is one that you guys don't want to talk about. It's going to take, wink, wink, a lot longer than you think. I know what you're thinking. You're going to come in. You're smarter than everybody else, aren't you? You know, you went to Harvard. You know, maybe you're a CEO of a company. Maybe you make a few $100,000 a year. Guess what? The market doesn't care. The market doesn't know you. So how could the market even care about you? So you're coming in thinking you're going to be different because you're special. You're God's special little child, aren't you? No, you're not. Everybody comes in thinking that. I came in thinking that everybody thinks that way. And it takes everybody way longer than they think, okay? Now, why you think that? Because one, you have a high opinion of yourself because, well, let's be honest, most people have a high opinion of themselves. And not only do you have a high opinion of yourself, you're reading all these advertisements. And you're saying, oh, trader turns 1,500 into $1 million in 3 years, 0 to $1 million in 18 months, right? How Fred made $1 million with 40 trades. I mean, look at this ad right here. Register for the imminent briefing, right? Allowed 2 to 5 times every month. Oh my gosh, 1.3 million in profits, starting with $5,000. Oh my gosh, I'm gonna get rich. I'm gonna be a trader. Nope, most of you are gonna fail. You're going to fail because you're coming in with unrealistic expectations. You think you're going to be really good at this in 3 to 6 months. You might be good at it in 3 to 6 years, but not 3 to 6 months. Why? The mental game is much harder than you think. You're going to come in risking too much money, not understanding your platform, doing things that you think are right but are wrong. You're going to resist getting education because you think it's too expensive, you think it's a sham, whatever. You're going to resist all of it and do it your way. You have no experience, but you're going to do it your way. Why? Because you know better. Because you have no experience, but you know better than the person who does have experience. Well, I'm telling you flat, it's going to be a rude awakening for you. Because it's going to take at least 1 to 3 years to get profitable. There might be a couple, few lucky people, but they're the exception. And by definition, the exception means the few. You're not that person. Statistically speaking, you're not that person. I know you're going to try to prove me wrong, and that's okay. You'll come back later and tell me I was right. You know how many emails I get from people all the time that say, "Thank you, Jared, thank you." Why? You saved my trading career because you told me to risk $10 a trade. $10 a trade saved my trading career. Because if I had done it the way I wanted to do it, I would have blown up my account because I was risking too much. I was following somebody else who told me I could get rich quick. Guys, this business is going to take you a good 2 to 3 years to get good at. The first year, if you break even, you've done well. From year 1 to year 2, you'll start making a little bit of money. Year 2 to year 3, that's when you start making okay money. And after year 3, things get a lot better. Take your time, guys. Please, take your time. Give yourself a realistic opportunity to succeed, okay? This is the kind of crap that's out there. Somebody sent me this, I think it was on YouTube, okay? The guy I was referring to, I can't imagine who that was risking 80% of his 6 times leverage account per trade. 80% of your account per trade. How many losses does that take to blow up an account? Not even 2. Less than 2. How many of you guys out there, be honest, are risking 10, 20, 30% of your account on a trade? Don't do it. Give yourself the opportunity to succeed. Why? Because you don't know what you don't know in the beginning. Everything in life takes time to get good at. We're human beings, man. You don't just plug a USB into our brain. We're human beings. Okay? So, take your time. Give yourself a fair chance to succeed. Otherwise, you're going to be an ex-trader, and there's thousands, if not millions of those people out there. And what do? They curse the business. Oh, I hate trading. That's a bunch of gamblers. No, it's not. Not when it's done right. Not when it's done properly. So don't be susceptible. Don't give in to that. Okay? So, considerations. It's going to take 1 to 3 years to get good at this. Don't think that you're better or more prepared because of prior success in a different industry or a university that you went to, or maybe, I don't know, you were a chief financial officer in a company. That doesn't prepare you for trading in any way, shape, or form. It doesn't. In 0 way, shape, or form. Okay? Profitability will come slow when you're new, and very, very small when you're new. Okay? And when you're new, just breaking even is a good goal. All right? So it's always good to keep your day job. Unless you're on retirement earnings, or unless you have a fat savings account that you don't mind spending, it's always better, guys, always better to have a second job or keep your day job. All right? That way, you give yourself the real chance to succeed. Remember I said earlier, to succeed, you first have to last. To succeed, you first have to last. Well, this is what I'm talking about, okay? Don't depend on your trading income for that first 1 to 3 years. That's putting too much pressure on yourself. Well, you don't understand, Jared, I just got laid off. Well, take the government's money then. They're giving it to everybody these days. I'm kidding. Get a side hustle if you have to. Seriously, go be a waiter, go be a waitress, go drive Uber, I don't know. Get a side hustle if you have to, okay? Sorry for the bumpiness, guys. We're hitting some choppiness here, some turbulence, okay? Expect ups and downs. This is not going to be an easy business, okay? It's going to be very frustrating along the way. I promise you it's going to be frustrating at times, but that's okay. What isn't frustrating when you first start? You have to get to that point where it becomes enjoyable, and that's when you get your head together, and that's when you start making money. So basically what I'm saying is, understand what's required, right? Hard work, dedication, persistence, that continual education, market experience, right? Anything less isn't good enough. I'm telling you flat out, you don't want to hear this right now. This will be the hardest thing you've ever done in your life. I'm telling you right now, trading will be the hardest thing you've ever done in your life, okay? Outside of maybe being in the military and getting shot at, this will be the hardest thing you've ever done. And I know what you're thinking. Don't tell me that, Jared. You know, I'm a member of Mensa. I have 170. I don't care. Guess what your IQ doesn't control? Emotion. It doesn't. Because emotions control thought. It's not the other way around. So your IQ doesn't much matter when it comes to emotions. Does your IQ matter when somebody pinches you or cuts you? No, it still hurts, doesn't it? I don't care if you have a 200 IQ, it hurts. Trading's going to prey on those emotions, and you're not ready for it. You'll see, I'm right. This one hurts, okay? Because this is, in many ways, the most unexpected part of trading, all right? The most unexpected part of trading, the BS of trading, okay? There's so much of it. It's amazing we're even able to overcome it. It really is. It's truly astonishing how much crap goes on in trading, okay? Stuff, much of, not all, but much of is completely out of your control. Not all of it, but a lot of it, okay? So let's talk about some of those things, all right? Corporations manipulating stock. Oh, that doesn't happen, Jared. That's illegal. It happens every day. Every single day it happens. Okay? Some CEO will go on Fox News or they'll go on MSNBC or Maria Bartiromo's show, and they will flat lie to the camera, straight out lie to the camera. Oh, we're in a great financial position, Maria. We're doing fantastic. In fact, we're thinking about opening 100 new locations. The next day they declare bankruptcy. It happens. Okay? And that CEO or that officer of the company is having an impact on that stock when they talk about it. The problem is every once in a while, you don't know that that person's on TV and you're in that stock and you're in that trade, and all of a sudden, wow, out of nowhere it either pops, sometimes it helps you, or drops, sometimes it hurts you. And you have no control over that. None. Bogus upgrades, bogus downgrades. There's no Chinese wall between the investment banking side and the trading side. None of that shit actually really happens. Okay? There's supposed to be, but it doesn't. There's no integrity in corporate America. Chick-fil-A, maybe. There's some integrity there. They're willing to lose business over their values and ideals. I respect that. Whether you agree or disagree, that's up to you. But I respect it. Most other businesses, show me the money. That is it. They'll donate to organizations they don't even give a shit about just because it looks good and they know they'll get more business from doing it. Okay? Integrity is dead. It's gone. It's gone in our politicians. It's gone in day-to-day life. It's just gone. And certainly on Wall Street, it's probably never been there. Okay? High-frequency trading firms. We've all had it happen to us. Massive shakeout. Huge topping tail. Huge bottoming tail. Only to watch it end the day higher. At your target sometimes. Well, it's BS. It happens, but it's part of trading. You know why? Because they're players too. You're playing the market. They're playing the market. It's fair game. Now, do they do some certain things that are probably illegal? Quote stuffing, spoofing. Yeah, oh, absolutely. I'm sure they do. But again, money talks. It's just part of trading. It's part of the BS of trading, but it's part of trading. So we try to mitigate that, putting our stops in different places maybe, using the 84% rule to get back into trades. That's how we mitigate. BS online hype, false realities. You're coming into this business, we just talked about it, with the wrong attitude, the wrong approach. Okay, and you don't know any different because that's all you've read. Commissions and fees. Now, while commissions and fees have gone down dramatically, and a lot of companies and platforms don't even have commissions, you might have a platform fee. You might have some margin interest fee, okay? But there's still a lot of people paying commissions. That's something that is a detriment to success. It's part of the business. Every business has operating costs, but it's part of it. Getting skipped on trades. Guys, a trade is worthless if you get skipped on it, right? It doesn't matter how good a trade is if you get skipped on it, right? It could be the greatest thing ever. If you get skipped, who cares? You're not getting paid on it. You're not getting paid on it, okay? So getting skipped on a trade is no fun. Getting partial fills is no fun. What if you're trying to get 1,000 shares, you only get filled for 236 shares? Well, now you're going to make a quarter less, or sorry, 75% less than you intended to make because you couldn't get all the shares, okay? Slippage on trades, right? Say you want to exit a trade for a $100 loss.
Say you're going to get out at 51 bucks. That's it. Stock's going lower. It's going lower. It hits 51. I'm gone. I'm out. What if you get filled at 50.70? That's 30 cent slippage. So instead of losing $100, you lose $130. Well, that's no fun. And slippage happens almost every single trade. Some trades, it's a lot. Some trades, it's not a lot. But again, we try to mitigate all these things, right? By giving them a little more room, or maybe not trading illiquid stocks, or making sure the level 2 is thick, making sure the spread isn't too bad. We try to mitigate, but you cannot eliminate. Okay? We try to mitigate, but you can't eliminate. Slippage, skippage, etc. Platform and tech issues. Hey, how about all you guys on Thinkorswim? How you guys been doing the last 2 months? All I've been hearing is complaints about Thinkorswim. Oh, the server's down. Oh, the platform froze. Oh, it filled me 5 minutes after I put the order in. I mean, I've never seen so many complaints about a platform in my life. But guess what? I'm not just dumping on Thinkorswim. Every platform has a problem at some point. All of them. I don't care if you're on TradeStation. I don't care if you're on Interactive Brokers, Fidelity, Schwab, Thinkorswim, Timbuktu platform. I don't care if you're on Robinhood or Webull, whatever. They all have problems at some point. The server freezes or the platform slows down significantly. Okay? You might have to restart your computer in the middle of the trading day. You might miss a trade because of it. These things really do happen. Okay? And here's the funny part. And also, one other thing to that. Tech issues. You might have your internet go down from time to time. Not often, but it might happen once a month. You don't know what that's worth. Maybe it saved you money. Maybe it lost you money. But it's part of the problem at times, depending on where you live. Right? I don't have it happen to me very frequently, but it happens from time to time. Okay? Maybe your computer has an update randomly in the middle of the day that you weren't sure about. Maybe. All of these little things add up to be a big thing sometimes. Okay? Now, after all of that, which is a lot of BS, after all of that, we still have to deal with ourselves. We still have to deal with the BS that is me, that is you. And that's the biggest of the BS. Our emotions, our lack of knowledge, underfunded, overhyped, ridiculous expectations. This is tough. So not only do I have to deal with corporations, high-frequency trading firms, online hype, lying to people about what this business is really about, overcoming commissions, overcoming skippage, overcoming slippage, overcoming platform fees. Once I get to all that, it's like Zelda. You know, guys, remember the Return of Link, the gold game? How do you beat Link? You fight your shadow. You fight your shadow. What a novel idea. So after you get through all of that crap, you've navigated through Zelda, the whole damn game. It took you months to figure it out. And then at the end, boom, you got to play yourself. It's the same thing in trading. You've navigated everything else. And then you muck it all up at the end. You found the perfect pattern. You got the right entry, the right stop, the right target. You got the right order type. Everything is going well. You enter the trade and then boom, the devil on your shoulder hits. I got to get out. I got to get out. It's up. What if it goes against me and you sell too soon? Or it's going against you and you don't take your stop loss. Oh, fat finger in a keyboard. There's another one. You're right. So all of these things are tough. This is what it looks like, right? This is what high frequency shakeouts look like. This all happened on one day. Why? Because it happened in the market. All right. That's nasty. Nastiness. On the short side, right here, look at this one on TRLA, right? This is old, guys. This is really old, but still. Shook out, got everybody, and then went lower, laughing at you. Ha ha. How about this one on ExxonMobil? Shakeout, screw you all. I broke the entire low of the day, and then went right back up. Ha ha. Laughing, as they're just counting their money, right? It happens, okay? It happens. Hold on. Got rid of that again. How about this? Oh, man, what a great trade. Awesome trade. Look at this beautiful breakdown with the shakeout. So you're like, sweet, it shook out before I got in. Like, you're salad. You need a box of tissues. That's how good this trade is. 1666 is the entry. You got nothing. Nothing. I know, because I took this trade. That's why it's on here, because I took it. I made $16 on a trade that should have made $1,000. Because I got filled for like 32 shares. Unbelievable. unbelievable. It happens, though. It happens. There's nothing you could do about it. See the volume? Everything on this worked out perfect except for the fill. Everything here was perfect except for the fill. And look at it. Look at the chart. It went down to 1580. It went down 86 cents on a 24-cent stop loss. More than 3 to 1. So what? Who cares? So what? You didn't get filled on it. I don't care how good the pattern is. You don't get paid for effort. You get paid for results. Well, the effort was great here. The result was not so much because I didn't get filled. It happens. Okay? Here's another one. 177.50. What a beautiful 3-bar play on the 2-minute. Beautiful. Oh, no fill, no fill, no fill, no fill. No fill. Patterns are only as good as the fill you get. It's just more BS we deal with. Patterns are only as good as the fill you get. Okay? Here's that same chart. All right? I put it out there on social media. It's a little bit older, but I put it on social media. So what how good it is? Who cares? I didn't get filled on. I got skipped. Completely skipped. Okay? And this is just a picture of a level 2 to show you that this stuff matters. Level 2 matters. Okay? Learning this. This is not some... Honest. Do you even know what level 2 is before you start trading? No. Still, many of you that trade every day still don't know what level 2 is. So understanding how to use and learn level 2. Most of you don't even realize it. You just assume, wrongfully, you assume that if you put an order in for a trade at a certain price, you'll automatically get filled. It's not how it works. But you don't know that, did you? That's the BS you have to overcome, learning those things. Okay? So there's an art to getting filled on trades. Not every trade. Some trades, like BAC in this case, are extremely liquid. But many trades aren't. It's part of the process, part of the learning process. The Holy Grail. That was a lot better movie than The Crystal Skull, I'll tell you that. Whew! Man, you want to talk about stealing money. Steven Spielberg should be ashamed of himself. Nuke the fridge, right? It's like jump the shark. Anyway, there is no Holy Grail, okay? So stop searching for it. It doesn't exist. You can search for a better way to trade, but there is no one way that says, this is it. Okay? Markets change here and there. Your personality, attitude change here and there. Your stress level changes, okay? So when you look at things, some things jump off the page at you. Now, what is the purpose of me showing you this chart? To show you that what matters is right in front of you. It's not some fancy indicator that you have to find on your platform, or that somebody told you when the MACD crosses the Fibonacci, but the Bollinger Band is at a certain level, combined with the COM channel index plus 100, but the relative strength indicator has to be minus 27. When all of those things come together, the unicorn appears, the rainbow will happen, and then gold falls from the sky. People really believe this shit. They really do. Like, people sell this stuff. The only thing that matters are these red and green candlesticks and then the volume. Okay? The price tells us what is happening, higher, lower, sideways, okay? And the volume tells us how it's happening. Is it happening with a level of commitment? Is it happening with lack of commitment? Does the stock even have enough shares for me to trade? This is it. It's all that matters. Now, I'm not saying if there's one indicator that you like, don't use it. That's not what I'm saying. What I'm saying is don't get caught up in there's a magic indicator. There isn't. Look, if you're a trader and you want to use COM channel index, go ahead. I'm not against it. But just don't think that that's the holy grail, that there's like 400 or 500 different indicators out there. I mean, if each one of them's the holy grail, why do you need the other 399 of them? I don't know. I'm asking. I don't know. I can't imagine why, So my point is if you want to use an indicator, that's okay. All right? Just don't use 50 of them. Don't think that that indicator is magic. Okay? It's not. Magic is in the price and in the volume. Everything is in this price. Every person in the world that's trading this stock is represented right here. Okay? And this one, I think it's pretty clear. It's a buy setup, right? I mean, you have your 50% retracement right here. Lower high, lower high, lower high, lower lows. It's probably near a moving average if you wanted to put an indicator on it. But again, 50% retracement at support. See the prior support right there? Draw a line right there. It's a nice buy setup. There's nothing on here but price and some volume. And I know what some people are thinking, but geez, Jared, it's easy to say that after the fact. We do it every day. I don't have anything else than what you're seeing right here on my charts. And the people in the chat room know this. You see my charts every day. There's nothing on my charts except for price and volume, because that's all that really matters. Again, you want to draw a trend line, fine. You want to put a moving average, fine. Just don't get caught up in it is what I'm trying to say. Don't get caught up in it. This is your job. Matching pictures. That is your job. Matching pictures. Take this picture, take these 4 pictures, and find the one that closest resembles this picture. And no, the answer is not C. No, the answer is not C. Okay? Your job is to take a picture from a great trade you took or from a course that you took or whatever, and then try to match that picture in the market while you're scanning. That is it. Keep it simple. Okay? Price is always, it's everything. Nothing's possible without it. So why do you guys focus on everything that's not price? Cloud cover, Fibonacci. I'm not even going to spend any more time on it. Just focus on price and volume. That's it. Again, if you want to throw one indicator, fine. But don't expect that indicator to be the holy magic grail. At the end of the day, guys, this is how everybody makes money in everything in life. Planning cycle of success. Notice it doesn't say planning cycle of trading success. It just says planning cycle of success, because this is the way human beings operate. Okay? They plan something. Well, most of you didn't plan your trading. Let's be honest. You just saw some article, some advertisement on Google and thought, oh, I want to be a trader. You didn't actually plan. Let's be honest about it. Okay? So you should plan. All right? Then try to implement the plan. Then you measure how you implemented the plan. You make an assessment, and then you make adjustments, right? So you put a plan on paper, all right? Then you try and go out and see how that plan works in the real world, right? So you go implement it. Then you measure the results. That's your tracking spreadsheet. Measure it. After you've measured it, you take a look at it and go, okay, what actually happened here? I tried this. I measured it. What's going on here? You make an assessment. And from that assessment, you go, okay, well, this needs to change. That needs to change. Guys, football teams use this. Game plan. Play the first quarter. Shit, we're losing by 14 points. Okay? Make some halftime adjustments or second quarter adjustments. This is what we do as human beings. Why don't you do it in trading? Oh, I know. You don't have a boss. And the boss is the one that would force you to do this and report to him on Saturday, your TPS report, right? But you don't have a boss. Lumbergh's not there to save you. So you do whatever you want. And when you do whatever you want, you usually fail. Very few people have the discipline to do this by themselves without any level of accountability. And let's be frank here, guys. We've seen it in society, particularly recently, Seattle 6 blocks. What happens when there's no accountability in life? You do whatever the F you want. Admit it. It's true. When there's no accountability in life, you just do whatever you want, Seattle. Okay? There's no accountability. Why should I follow the law? Nobody's going to stop me. Right? So, ask yourself, am I being objective? Because it's going to take objectivity to make actual improvements. If you're going to lie to yourself all the time, you're going to have a hard time making improvements. Because you're going to improve upon something that's actually not true. Right? You're thinking high, and let's be honest, a lot of us have a high opinion of ourselves. We all do, in some capacity. Even people that don't say it, inside they have a high opinion of themselves. So you have to define yourself as an individual and focus always, 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 always on the process, not the outcome. Too many of you have outcome goals. I've talked about this frequently in the past. You have great outcome goals, but you have no way to get from A to B. A is where you are today, B is where you want to be, but you don't know how to get from A to B because you don't have process goals. You don't have a plan. You don't know, and you don't have a boss that forces you to make a plan. So you don't have the process. You just have a picture of a Lamborghini on your wall and you know you want it. You don't know how you're going to get it. Right? You have a picture of freedom, flexibility, time with your kids. Sounds great. How are you going to get it? You don't know, because a boss hasn't forced you to build a plan and put you through the process. You need to do it on your own, and that's where the accountability comes in. You have to be accountable to yourself, and it's one of the hardest things to be in life. We often like to lie to ourselves. We do. Because hearing the truth really hurts. Right? Telling people that police are good for society. People don't want to hear it. I just want to do whatever I want to do. Well, telling yourself you need a plan and you need to have somebody hold you accountable, that's hard work. Right? Going to the gym, losing weight, getting in shape, it's hard work. Are you going to go on your own? Nope. What's the statistic? Some of you guys could probably give it to me better than I can. Something like gym membership goes up 125% within a week after New Year's, and by March 1st, something like 80% of those people have quit the gym. Something to that effect, okay? Somebody can give me the exact numbers. Why? Because nobody's forcing you to go. You ran out of commitment. You ran out of accountability. Well, if you do that in trading, you just won't be a trader very much, or very much longer, I should say, okay? So it's all about management, guys. There's no holy grail. Money management, trade management, time management, personality, behavioral management. It's all about management. Okay? There's more than one way to be successful. There's more than one way to manage a trade. You can do pivots. You can bar by bar. You can do all or nothing. You could trade 3-bar plays. You could trade climactics. You could trade breakouts. You could trade buy setups. There's tons of patterns you can trade. Tons of different stocks you can trade. You don't even have to trade stocks. You could trade Forex. You could trade options. There's tons of different things you can trade. There's no one way that's perfect. Anybody that tells you otherwise is wrong. And now, they might have a way that works really well for them, but it may not work as well for you. Okay? Know yourself. If you don't, it's not even worth doing this business. If you don't get to a point where you're trying to truly work on yourself and make yourself better, this is going to be really tough for you. And the reason I'm telling you this is because a boss will just tell you at some point. They'll either get rid of you and say, you know what, honestly, we just don't see eye to eye, and I don't see potential in you. But if they see potential and they'll work with you, that's the problem with trading. You have to see it in yourself and work with yourself to improve. That's why trading buddies are good. They help not only tell you the truth, but they keep you accountable to it as well. Okay? And this is a big one. Understand your expectation, guys. Really, understand it. Know what you're trying to accomplish before you enter this business and give it a realistic look. Don't come in and just say, I want, without knowing how you're going to get there and how long it might take you to get there. Because if you're wrong about your time frame, you're not going to make it. If you think this business is going to take 0 to 1 year, 0 to 12 months, you won't make it. Maybe 1 out of 100,000 of you will. 1 out of 10,000 of you will. But if you come in with a timeline that's 0 to 12 months, and you're going to come hell or high water, you're either going to be successful or quit at 12 months, you're going to be quitting. Now, if you readjust your timeline after 12 months, that's different. That's what I did. I gave myself 12 months, and at 12 months, I wasn't ready. But I saw improvement, so I said, I'm going to give it more time. But I came in with an unrealistic timeline. That's why I give these lectures like this, because I'm talking about myself in many of the things I say to you guys. I did most of this stuff, except for blow up an account. That's the one thing I've never done. But other than that, I've done most of the stuff I'm telling you. All right? Keep it simple. Okay? So what is required? Education and guidance. Nope, not pitching you nothing. You can take a course from somebody else for all I care. I really don't give a shit. Okay? But you're going to need some type of guidance from somebody. That's just life. Okay? That's just life. All right? You need a well-defined plan. It's your roadmap to success. And it'll help to build that plan when you have guidance from somebody. Doing it all on yourself is kind of tough. In life, we're human beings. What do we typically do? We learn from others. In everything we do, we learn from watching, from listening, from tasting, from hearing, etc. That's what we do. Okay? So have a plan, get some guidance, be objective, stay humble, because the market, it's just going to be really hard if you don't stay humble. If you come in with a massive ego, it's going to be brutal. Okay? They're the types of people that usually get crushed in terms of their accounts because their ego trades for them. And when the ego trades for them, they tend to lose a lot more money than they should have. And then last, and it's definitely the most important part, is experience. All right? You need market experience. But understand your lack of experience when you start, because if you don't, you probably have an expectation that grossly exceeds your experience. And if you do that, you're not going to do well, because you're going to think you're something that you're really not, or you're going to think this business is something that it's actually not. And make no bones and mistakes about it. This business is hard. Straight crazy hard. Okay? So come in, have a realistic timeline. Don't be greedy. Don't be naive. Work towards your goals with humility, objectivity, patience, and have somebody check your work, man. If you don't, it's going to be tough, okay? Common mistakes, the opposite of what I just said. Over trading, not having a plan, not understanding level 2, poor money management, blindly following other people. Pretty much all the things you can do wrong. Not all. There's probably more than that. Not take your stop losses, etc. Okay? So that's it. Know yourself. Put an outline together, how you're going to achieve it. Get the necessary training. Work purposefully towards those goals and be objective but flexible. Because truly anyone can do it, just most won't. Let's be honest, anyone can, but most won't. Because they're not going to put in the time and effort it takes. All right? So that will do it for this week's lecture. I hope you guys learned something, and I hope this will help keep you out of trouble, because those are 5 of the things I wish I had known, really truly known, before I started trading. It would have saved me a lot of time and a lot of humility and pain, I guess, along the way. So I'm hoping it'll do the same for you guys. All right, so we'll get back at it again next week. Have a good one, guys. To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.